Good evening, master traders. It's your Uncle Charles here, and looks like yesterday's breakdown of the 585 level stayed intact. Now, 585 is a macro level fib level. If you start your fib level from all-time highs, from February 19th high down to April 7th low, you will get the 78.6 fib level at 585. We lost this level yesterday. And today we got our second close of that level today. So far, the breakdown stayed intact. Now, intraday, you guys can see intraday on my 15-minute chart, multiple times the market makers respected this area. Even when we cleared it as a resistance level, it even treated it as a support before hitting my next resistance level at 586.5, and it even had a false breakout setup at the end of the day. In my opinion, today, the morning was a good trading day, a trading morning. You know, we short breakdowns of support, long breakouts of resistance, play it level to level. I give you guys the levels ahead of time. Then the afternoon, it ended up being a trappy afternoon where we had a false breakout. The false breakout was at the end of the day, but in the middle of the afternoon, we had a false breakdown setup, which gave us a nice intraday bounce. But overall, on the daily chart, you can see on this candle, we didn't really go anywhere. It looks like a little choppy doji candle. Now, when you see a big, decent-sized body candle like that next to a doji, you got to be very cautious for the third candle, because it can either be a morning star pattern or a bearish continuation. Okay, the good news is the third candle, between candles that look like these, a big body red or green candle followed by a doji, the third candle tends to be volatile as well. So there's a good chance we are going to end the week this week very strong with some volatility. Should be very tradable. Question is, will it be bullish or will it be bearish? As long as below 585, Uncle Charles is bearish, and I favor a back test of this uptrend line. I favor a test of support on this uptrend line. Okay, now it has been sloping up for support for tomorrow. To test this line, this uptrend line, SPY we need to drop down to 579. So below 585, and I do have support at 583. That's around where it closed today. And below that I have 581 and then 579. If SPY drops below 579, if we get a 15-minute close below 579 or higher, a 30-minute chart, 1-hour chart, up to you, but no lower than a 15-minute chart, if we get it, that would be a breakdown for the SPY. My next target would be the 200 daily moving average, which is around 575.5. And if that is lost as well, guys, it's going to be extremely bearish. We have gaps to the downside, multiple gaps to the downside. We have areas of imbalances to the downside. They will have the 50 daily moving average to the downside. Bears have lots of reasons to head back to the downside if this uptrend line is lost. Now, as long as below 585, I do expect a test of that uptrend line for the third time. Now, I don't know if it's going to bounce, and I don't know if it's going to break down. I'm just identifying the levels and areas for us so we know where to react. If 579 breaks down, then we know either keep holding your puts or you want to look to enter puts, and this would be good for a swing tradable move. If we recapture 585. If we recapture it, we got ourselves a false breakdown setup. False breakdown setups is your trigger to enter calls. If we clear resistant levels, 585, 586.5, 588, that is your trigger to enter calls or go long. I hope that makes sense. I hope that it's clear to you guys. Okay, I'm trying my best. And I see, and I'm very proud that a lot of you guys are getting it. And that's why I call you guys master traders. The people that watch Uncle Charlie's video are money magnets and master traders. And tomorrow we're going to end the week strong. I am expecting a decent sized move tomorrow. So now that we know the levels and the setups, make sure we trade it unbiasedly tomorrow. Now we're moving on to triple Q. I have 513 and 511. Okay, the 513 area held as support today. Okay, it held as support. The today's low was actually around 512.3, but we closed at 514, so we avoided a breakdown of 513. We also avoided a breakdown of 511. If the bears want to get a pullback, $5-10 move to the downside, they need to break down 513 and 511, and that should send us down. For the uptrend line that I had since early April, for a third test, triple Q would need to break down support level to go test 496. That would be the third test for triple Q. So if we break down 513 and 511 tomorrow, 499 and 496 would be my target to the downside. And below 496, triple Q would be in breakdown mode. That is bearish. You should be holding puts if we are bearish. Now, if we are getting a bounce, I have resistance at 515, 516.5, 518, 520, and 522. New highs incoming or back to all-time highs if 522 clears. All right, let's keep the plan simple. We break down 513 and 511 tomorrow. Look to short. If we break out 515 and 516.5, look to long with 522 back in play. Above 522, keep holding your longs or your calls. NVDA still overall chopping. Unfortunately, it closed at 132.8, recapturing the 132 level, but it's still in the chop phase. Now that we recapture it, can tomorrow be bullish? It will need to clear 133.5, 135, and 136.3. Unless that happens, no new highs are coming, guys. I'm talking about the uptrend we had since early April. No new highs are coming unless those levels can clear. If we break down 132 again, and especially that 130.6 fib level which held yesterday, then we are dropping down. We have lots of gaps that need to get filled. Tesla with the beautiful bounce off of the megaphone pattern. Beautiful. I mentioned to the group this morning in my Discord, we want to look to long above 332 if 330.6 can hold. It definitely held. It cleared, gave us a beautiful bounce to the upside. Once again, 339.6 is support. If it can hold, we should get another $10 to $20 bounce to the upside to fill out this megaphone pattern. That's close to the 360 area. But if we lose 339.6 tomorrow, then today was just a dead cat bounce. Look to short below 339.6. Here is coin with the bounce, but we got a rising wedge here. To break down this rising wedge, 266 is the breakdown level. So it's gapping up a little bit right now, but I have support at 271.2. 270 and the breakdown of the rising wedge at 266. If these levels fail as support, it's going to be a waterfall drop to the downside for coin. You want to enter puts, but an overall bullish above 271.6, and as long as above it, my target is the 278 to the 280 area. Above 278 and 280 would be a breakout of the rising wedge, and we should go up a lot higher. And here is the VIX. Stalling, had a nice body candle yesterday, but didn't really go anywhere today. 20.5 is the level to watch for tomorrow. Above it is bullish. Below it, we are bearish with 19 and 17.7 as support levels. Above 20.4, expect a bounce. We should head up to 23 or higher. Guys, I love y'all. Thank you guys so much for tuning in and watching my video. Hope you guys made a shit ton of money. And let's do this tomorrow again. Peace.